I've got a powerful one for you today. I'm going to talk about the first thing will be the economy that is truly troubled. And you've got to look at the real statistics. You've got to connect the dots in order for it all to make sense. I will do that for you today. The second thing I want to look at is the stock buybacks. The buybacks, believe it or not, for those who don't know, have been the biggest buyers of stocks. Imagine their own company buying back their stock is the biggest buyer. The third thing I want to look at is the magical money maker. That's right. I'm going to talk about that and so much more. So stay tuned. Let's go. This is the perfect one to start off this video. I just wanted to show you the headline. Wall Street Journal, Americans are stocking up on toilet paper again. Procter & Gamble has increased production and some retailers say orders are being limited as demand surges. So we are going back a year and a half or more at this point. We're doing the same thing again. People are going to the stores. They're buying up the toilet paper. The stores have to restrict 1 per person, 2 per person, and so on. They're talking about here the fact that they've been ramping up production 24 hours a day, 7 days a week. The supply chain is under some serious pressure. We know that, not just seeing the container ships, 47 container ships off the coast of LA Long Beach waiting around trying to deliver, but they can't happen. You're seeing the truck driver situation. You're looking at all these different things piling up on top of each other. And meanwhile, you've got a truly slow economy that is being force-fed stimulus when really what it needs is detoxification, but that's a whole different story. Take a look at this. Commodities up in price, commodities down in price. And you can see a very different list. At the bottom, commodities down in price, lumber and wood. And then basically commodities up is everything. Everything you could think of right here. Okay? That should tell you what we are seeing today. Yes, lumber has come down. But basically everything else is up. All right, now this is the manufacturing PMI. There are basically 2 points that I wanted to note here. Essentially, marked improvement in operating conditions amid strong demand conditions. Substantial rise in new orders, but output growth is constrained by material shortages. Inflationary pressures reach fresh series high. Now we have the numbers. Clearly, they're showing you here on the right-hand side. Let me try to zoom in if I can. My head might be in the way of that. But this is the US manufacturing PMI. Of course, when you hit over 50, that's positive. And this is the 50 line right here. So during 2020, this came down very, very far. Hadn't seen anything like that in a long time. Now we've rocketed higher. However, this has started to turn down. So I'm going to keep an eye on it. Is this just a little bump in the road? You know, there are always fluctuations, just like any other statistic, but certainly it is important to follow what's happening with manufacturing, imports, exports, and then not just look at it as a statistic on its own, but be able to connect those dots. Okay, so let's do more of that. Early signs of supply shortages are easing. Input price pressures have seemed to peak. And looking at this here, left-hand side, Euro area, manufacturing, PMI, subcomponents. And that blue line there, that's manufacturing output. Again, coming down as well. So we're seeing the same thing, Euro, and also on the US side, manufacturing, PMI, input prices. These have declined a little bit after going straight up through this period, 2020 into 2021. Things have kind of leveled off and have started to come down. What is this? Is this a normalization of prices? Is this a reduction in demand? Is this something to do with the supply chain in general? Or something I've noted previously was that a lot of businesses and individuals had throughout 2020, they saw what was happening. They saw how there was all of these shortages. And as we moved into 2021, they thought to themselves, you know what? My store is going to reopen now. I'm not going to order what I used to before. I'm not going to order 1 month supply. I'm going to order a 3-month supply. I'm going to order a 6-month supply because I don't want to encounter the same problems that I did previously or that I'm hearing about. So there are many businesses doing this exact thing. Is that now over or reduced to some degree? And we are seeing the businesses change. Another thing that's happening with businesses here, you can see this right now, businesses, they are traveling less. They're starting to cancel. They're starting to reduce their trips, believe it or not. Okay? 60% likely to postpone their travel plans, 52% likely to cancel existing travel plans with no intent to reschedule. And we're talking about business travelers here. All right? Now, from what I saw in the data, it is now at 80%, okay, where we were back in 2019. Okay, we're at 80%. That's not bad considering where we were a year ago. This isn't bad, but it's still not up to where it needs to be for these type of businesses, for hotels, for the tourism, for the airlines, and so on. They need it back to that 100% because actually they really need more like 150% to kind of make up for that loss. But I'm not sure that's exactly going to be the case. And then to note this, you're seeing what's happening with individuals. Well, they're changing their perspective on what they see now today with their jobs. A Microsoft survey of more than 30,000 global workers showed that 41% of workers were considering quitting or changing their professions this year. So I think we've got a big shakeup. I think what's happened here is, really, and I hate to use the word, but it is unprecedented because of what we've seen. On almost every level, things have changed. And this is just one of those. A lot of people and businesses are starting to truly shift. So let's talk about what's happening today and what it means to you in the Money GPS Insights. The economy right now today, it relies on one thing, and that is stimulus. Let's be honest. If we can acknowledge that, that's the first step. Now that the stimulus is going away with the whole stimulus packages, the unemployment benefits and so on, the economy is weakened as a result. And of course, that could have a lasting impact. On the other hand, you see stocks completely ignoring what's happening in the economy on any day. And as a result, you're seeing the central banks coming in and ensuring that investors believe that that is the case. Don't look at that. We're going to take care of it. Don't worry. Easy money, easy money, easy money. This trend looks like it's been continuing for this long. Can it persist forever? This article here is talking about the empty shelves, long waits, and yes, higher prices. More than 1 million rainbow high dolls are primed for the holidays, but first they need to make it out of China. So this is the case right here where you're seeing a lot of the supply chain issues. Personally, I've not experienced what they're talking about in the news, just to give you my own point here, but we are seeing it on many different levels. I did the live interview, probably it was a week and a half, 2 weeks ago. And I brought somebody from the shipping industry who talked about this, how he's experiencing it. While he does see some fishy business going on, certainly he's been seeing a lot of that slow down, but we're just seeing that everywhere. I'm pulling data from all different sources, all kind of saying the same thing. And this right here, I'm afraid there's simply not enough time to get the products on the shelf this year. So already they're saying that. Think about that. Already. And, it's funny because here we are at the beginning of September. We have several months to get that in time. And they're saying not enough time. So we're going to see, because Q4, this time frame here, they're, by far, it's the busiest time for shipping, any sort of logistics, okay, on all angles from this. And the costs generally rise during this time. Storage facilities charge more during this time. And yet we knew this was coming. We knew it, but they cannot even keep up. Or that's what they're saying. So that's what we have to go with anyway. But I just know how it affects you as the individual. And guess what? Higher prices. about half of Manhattan employers delay return to work. They're worried, they're concerned, they're pushing it back. So first they said, okay, summertime, we're going to go back. And then it's going to be fall. Okay. All right. Now then maybe it's the end of the year. Some businesses are saying in January, and others are just saying indefinitely, we don't know. But at this time, nobody's working from the office, or only those who are required to be there. I have heard from many people personally that have told me that their job has shifted to work from home. That's it. It's just your policy is now work from home. The worry that I personally have about this is that if somebody can work from home and now they live, maybe they live in the cottage country, maybe they live on the beach because, hey, I have this time now, they're telling me I can work from home. Maybe the boss sees that. They see the beach in the background. They see things are looking pretty good for you. And maybe they can now hire that person in the Philippines who's making $8 an hour versus $40 an hour, or $50 an hour, or whatever it might be. You see, it becomes easier to outsource. And I think that could be where we go prior to getting rid of people altogether and replacing them with computers and automation. Now, I want to flip the page. I want to change the gears, and I want to look at what's happening in the markets, okay? Because the markets, so you have the economy stuff. The markets, however, they don't care about the economy. Financials, corporate, client buybacks trends are at record levels. This comes out of Bank of America, but you're seeing what's happening with the financials. The big financial institutions are doing a buyback like we've never seen before. And this is coming, they've been doing so many buybacks over the last several years, of course, except through the 2020 period where they weren't able to do so. But as soon as they lift that cap, they went crazy. And guess what? The stocks have done well. Why? Because they're the biggest buyers. They've been the biggest buyers since 2009. Look at the FANG index. I mean, look how incredible it has been. Yes, during 2020, it kind of went down there. But nobody even cares. Nobody even cares. They just keep putting money in. People like Cathie Wood are ensuring that this continues, okay? Cathie Wood's new ETF shuts out banking, fossil fuels, and vice. And what are they calling this? The Transparency ETF. Basically her version of an ESG. Nobody knows what's going in. Nobody knows what's going out. Nobody knows what's under the hood. But come on, who cares? Who cares? It's environmentally friendly. Therefore, it's good. Okay, now this is the NASDAQ, and I'm just showing you right here, historically what we have seen constantly. This constantly happens. Look at the Bollinger Band. This is the top and the bottom lines here, the purple lines. And this right here, the red is your 20-day moving average, and this is your 50-day moving average, the orange line. And just find what happens over and over and over again. People can play this, but they don't. So there's always people asking me like, why wouldn't, I'm in the market, I'm out of the market. They're trying to judge me personally, or they're trying to just make statements about why they should always remain in. Look, if you are worried about the risk, you could learn how to do swing trading, and you could make some money along the way, whether it's high, whether it's low, it's going down, it's going up. You could be taking advantage of this. Look, how many times does this happen? It hits the top. I hope you could see that. It hits the top of the Bollinger Band, comes down, finds support around the 20-day moving average, moves back up. Okay, again, found support down here on the 50-day moving average. Guess what? Bounce right back up to the top of the Bollinger Band and then comes down. You don't even have to be perfect with your timing, and you could still make money on the meat of the trade. Again, came around that 50-day moving average. Guess what? Bounced back up on the top of the Bollinger Band over and over and over again. Lots of symbols, lots of signals as well. And I think that people could learn about this and be able to not stay out of the market, because that's a big concern for people. I don't want to stay out of the market. But you don't have to be in with such conviction and still be able to play it. Different story altogether. I know some people don't want to hear about it, but anyway. NFTs and DeFi boost Ethereum, DIMS, clamor of Bitcoin maximalists. So essentially saying that, hey, Ether's gained 350 throughout the year. Bitcoin's gained only 60%. But of course, looking at it in relation to the NFT craze, you start to see where the demand has been coming from, or some of the demand. And of course, Ether has, it's being used in different ways. Whereas it's not just a store of value or somewhere to park the money, it's actually being more actively used, at least what they're saying. This is the NFT marketplace monthly volume, and August 2021 has been insane for the amount of purchases that are being done. I think it's crazy to see this, how much money is truly flowing into these things. What is your opinion on NFTs? Let me know. Is this right now? I'm talking about right now, 2021. I know the future technology and so on and so on. The market in 2021. What do you think about NFTs? Please put that in the comments below. I want to ask you one question. Are you an insider? Because if not, you've got to join up to the insiders. That's my way to break through this system that they've set up to prevent me to get to you. But 5 days a week, I will send you the video of the day, and you're going to be able to get that directly to your inbox, totally free. It's available here at this card or at themoneygps.com. Look, before you go, just one question. Have you done your duty today? That's right. If you want to help end the Fed, the only way to do that, I have found the stats, I've looked into it. The only way is to give a like on this video. That's right. Every like counts for one down on the Federal Reserve. Hit that like button on the way out to support the channel. Thank you very much. If you haven't seen this video yet, you definitely want to check it out. Click it and I'll see you there.